Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Novo Nordisk.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast.
Okay.
And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
We are diving into a company that essentially owns the fastest growing healthcare segment right now.
Hard to overstate it. The story of Novo Nordisk is it's all about its dominance in the GLP-1 market.
Primarily with Ozempic and Wegovy.
Exactly, the semaglutide products.
And when we talk dominance, we mean serious scale.
Yeah, the latest figures show just how centralized their revenue is. The metabolic segment, driven by those drugs.
It's almost everything.
It delivered an astonishing 88.7% of their total sales in the first quarter of 2025.
Wow, so this isn't just growth, this is like total market capture.
It's market capture at a scale that's hard to comprehend. And that capture, it translates directly into some impressive financials.
Okay, so let's get into the numbers.
In Q1 2025, revenue was approximately $17.1 billion.
And that's up how much?
That's a 29% year-over-year increase. But here's what's really crucial. Their operational efficiency is spiking.
Right, the margins.
They reported a gross profit margin of 83.8%.
83. That's almost a software company margin. It's not what you expect in pharma.
It's not. And their operating margin hit 47.1%. This suggests they are achieving, massive economies of scale in manufacturing.
And that financial health is key to understanding what's next, right?
Absolutely. They have massive free cash flow. We're talking DKK 42.1 billion in Q1 2025 alone.
So what are they doing with all that cash?
They're funding huge capacity expansions. They're investing 65 billion DKK into GLP-1 production.
So they're building the infrastructure to stay ahead.
They're building the moat. And because of this, they're projected to deliver substantial 2026 EPS growth, forecast at 13.6% higher than previous estimates.
Which brings us to that competitive moat. Why aren't rivals like Eli Lilly or Pfizer just, catching up?
Well, the firm has this powerful trifecta.
Okay.
Superior intellectual property, manufacturing scale, and high switching costs for patients.
Let's talk specifics on that moat, the IP first.
Their core semaglutide compound patents are protected until 2031 in the U.S.
And that's not all, is it?
No, and maybe more importantly, their delivery system patents, the pens. They run to 2035. That's a massive shield.
And manufacturing is, you could argue, an even bigger barrier right now.
I would argue that. Novo Nordisk controls over 90% of the global semaglutide raw ingredient production.
90%?
Yes. This control gives them an estimated 24-month lead over any potential competitor trying to produce a biosimilar.
And we see that play out in the market share numbers.
We do. They hold around 68% of the U.S. GLP-1 market, partly because competitors...
Like Eli Lilly.
Exactly, like Eli Lilly, have faced these production bottlenecks. They just can't make enough.
And once patients are on the drug, they tend to stay on it.
Yes, the adherence is incredible. Real-world data shows over 70% of Ozempic patients remain on the therapy for more than a year.
Which means predictable, recurring revenue.
You got it.
Okay, moving to the technical side of things, the stock chart has been pretty constructive.
Very constructive. The price action has recently formed a notable 7-month cup and handle pattern.
Which is a classic bullish sign.
Traditionally, yes. And it was concerned by breaking above the $120 mark earlier this year on heavy volume.
So for those watching momentum indicators.
The stock confirmed a golden cross on April 3, 2025. That's when the 50-day moving average crossed above the 200-day.
A textbook confirmation of positive momentum.
It confirms the acceleration. And for entry points, analysts see strong support clustered around the $108 to $110 range.
Which is right around that 200-day average.
It aligns very closely.
Now, the immediate market sentiment has really been fueled by catalysts, right?
For sure. Most recently, the FDA approval of the oral Wegovy pill.
That feels like a game changer.
It is. The news surrounding this pill, which is expected to be available for self-pay patients at around $250 a month.
Wait, $250 a month? That's surprisingly low.
It is. And that availability is slated for early 2026. This news alone caused immediate 8 to 9% stock surges.
So looking ahead, what are the key calendar events that could provide more boosts?
Well, the Q1 2025 earnings are expected around April 24th. Analysts are looking for consensus revenue around DKK 122 billion.
But the big one everyone's watching is in May.
It is. The Investor Day in New York around May 14th and 15th.
Why is that day so crucial?
It's crucial because management is expected to unveil their entire 2025 to 2030 strategy.
Including some pretty ambitious targets.
Very ambitious, like treating 12 million patients by 2027, and importantly, updates on pipeline drugs.
Speaking of the pipeline, they're certainly looking beyond just semaglutide.
Oh, absolutely. They had positive phase 2 success with a drug called NN0443.
Where's that one?
It's a GLP-1 glucagon dual agonist. It showed great results in Netroforce patients.
So fatty liver disease.
Exactly. It achieved a 14.2% liver fat reduction, which is significant.
They also have that combination therapy, CagriSema, advancing.
Right. And the FDA PDUFA date for the adolescent semaglutide indication is set for July 28th. Expanding the label is a big deal.
Okay, we have to address the bear case, because despite all this dominance, the stock is not without risks.
No stock is. And the top risks are pretty clear. Intense competition from rivals, particularly on the oral front.
And pricing.
And persistent pricing pressure.
That pricing pressure is the big shadow, isn't it?
Yeah.
Specifically from, Medicare Part D negotiations and the potential for generics.
Generics starting in March 2026 is the date to watch.
But there's a counter-argument, right? That these risks are maybe already priced in.
Yeah, it's a strong argument. The stock's forward price-earnings ratio is currently around 14x.
Which for a company like this is low.
It's about half its historical average. So the market's already discounting for those future risks.
Plus, the company has shown they can manage pricing erosion.
They have. In Q1 2025, net pricing only declined 1.2% in the U.S.
Which is nothing.
It's easily offset by 18% volume growth. Volume is winning that battle.
And what about that concentration risk, that 89% reliance on one type of drug?
Management is actively addressing it. R&D spending is up 15% year over year.
You mentioned the pipeline.
They have 5 other GLP-1 related pipeline candidates in phase 2 development. They're trying to diversify revenue significantly by the end of the decade.
So ultimately, the thesis here seems pretty clear.
I think so. Novo Nordisk sits atop a generational market opportunity in obesity and metabolic health.
And they have the defenses to protect it.
Their manufacturing-led and IP moat give them years to monetize this. And the upcoming oral pill, coupled with strong pipeline catalysts like CagriSema and the Nenayus drug.
It positions them for really compoundable growth for years to come.
It does. It's a multi-year horizon.
That combination of market dominance and future-proofing the pipeline is really what stands out. For you, the listener, understanding that the firm is aiming to take its flagship drugs far beyond just diabetes and obesity.
Into these massive markets like cardiovascular health and NVO.
That shows you the true potential for growth at scale.
That's it for today's analysis of Novo Nordisk. If you want to stay informed on the next set of catalysts, make sure you hit that subscribe button.
And we'll see you tomorrow on Smart Wealth with Joshua.